A very good evening to everyone. I welcome you on behalf of the Committee on Financial Markets and Investors Protection to this webinar on inbound and outbound investment opportunities through GIFT IFSC. We have with us four speakers today who will be deliberating upon the topic. And we also have the chairman of the committee, CA Durgesh Kumar Kabra, who is the founding and managing partner of DMKH and Company, with us today, who is the chairman of the committee. And he's also the chairman of the Career Counseling Committee of ICI. And he would be giving his welcome address to the participants and the speakers. So over to you, sir.
Thank you, Sangini. It's indeed a pleasure to be part of this webinar today. Good evening to everyone. Uh, I welcome you all to this webinar on inbound and outbound investment opportunities through GIFT IFSC. GIFT IFSC has emerged as a purpose-built jurisdictions for cross-border capital flows, offering regulatory efficiency, tax certainty, and global market access from within India. For investors, it is not merely an alternative location, but it is a strategic execution platform too. From an inbound investment perspective, if we talk, GIFT IFSC enables foreign investors, global funds, and family offices to deploy capital into India through simplified entry norms, a liberalized foreign exchange framework, and a global aligned regulatory regime. The, these features significantly reduce friction, timeliness, and structuring complexities. So, the GIFT IFSC is helping in all these kind of investment which can flow to the India. On the outbound side, if we talk, GIFT IFSC provides Indian investors and corporates with a compliant and efficient route to access global securities, alternative assets, and diversified investment opportunities, while also facilitating effective currency and risk management. A key strength of IFSC ecosystem lies in its well-designed and fund structures platform supported by a concessional and stable tax framework. However, it is important to recognize that substance, governance, and robust compliance are critical for sustaining investors' confidence. Investors' protections within GIFT City is ensured through a disclosure-based regime, risk-based supervision, and strong safeguards for client assets. This balance between flexibility and oversight is what makes the IFSC framework credible for long-term investment. For chartered accountant, if we would like to see, and the professional, this ecosystem creates significant opportunities in structuring, advisory, compliance, and ongoing governance support to the various inbound and outbound investment opportunities. Today's webinar is designed as a practical deep dive to help investors and professionals translate opportunities into informed actions. I encourage all the participants to engage actively and draw maximum value from the experts' insight being shared. I'm sure that the speakers, Mr. Pankaj Chaudhary and uh, Pawan Chaudhary, then Amit Kedia, then Ashok Singalji would definitely uh, make a lot of things or will discuss a lot of things to learn for all of you, because these people from the uh, gift city only, and they are aware of what is nuances over there as far as the inbound and outbound investments are concerned, and I'm sure will help all the chartered accountants who are attending this particular webinar to get something out of it and be prepared for advising their clients who wish to have inbound and outbound investment. With this, thank you all, and thanks to Pawanji, Ashokji, and Amiji for being part of this webinar and giving your precious time so you can build the skill set of our members. Thank you very much.
Thank you so much, sir. So I would like to introduce our speakers for today. We have four speakers with us. We have two of them from the IFSCA, one from the India INX, and one is our domain expert. The firstly, we'll be moving on to the presentation of CA Pavan Chaudhary sir and Mr. Paras Jain. So I would like to briefly introduce the both of them. Both of them are here from the IFSCA. Pavan Chaudhary sir is currently serving as the DGM at the IFSCA, where he oversees the Division of Corporate Finance, Division of Sustainable Finance, and Registration of Intermediaries. Prior to his current role, he was posted in the Department of Debt and Hybrid Securities of SEBI, where he contributed to key regulatory frameworks and policy initiatives related to corporate bonds, municipal bonds, REITs, and InvITs. He has also served in SEBI's Integrated Surveillance Department, gaining valuable experience in market surveillance and regulatory oversight. I welcome you to the webinar, sir, and hope to have an engaging session. And now I would like to also introduce his colleague, Mr. Paras Jain, who is also from IFSCA. Mr. Paras is serving as the assistant manager at IFSCA. He works in the division of funds, which is responsible for handling registrations of FMEs and schemes at the IFSCA. He brings over 7 years of experience across IT, banking, and regulatory sectors. He has also been associated with the IFSCA for more than 2 years now. I welcome you both to the webinar and hope to have an engaging and insightful session. Over to you, sir.
Yeah, thank you, Sangini, for a brief introduction. And I would also like to thank ICI for organizing this webinar on an important subject, which is actually the foundation stone of IFSC, as such to say, because the idea behind having a gift IFSC zone was to have a global gateway of global capital. So the way gift IFSC was designed is that all the intermediation which are happening overseas should happen through the gift IFSCA. So I'll just share my PPT.
Yeah, it's visible.
Yeah. I hope PPT is visible, right?
It's visible, sir, yes.
Yeah. So the structure of a gift city was designed in such a way so it's almost around 900 acres. So out of that, two-third acres considers the domestic tariff area, whereas
Pa-
one-third is
पवन
the
जी सो
international.
पवन जी प्रेजेंटर्स व्यू से नॉर्मल व्यू में कर दो प्रेजेंटर्स व्यू आपको दिखे ऐसा क्योंकि ये पूरा स्क्रीन प्रेजेंटर व्यू का हमको दिख रहा है ना वो हमको दिख रहा है प्रेजेंटर्स व्यू का
Just a minute.
So you can just try turning on the full screen mode. That'll work.
Yeah, yeah. This is okay now?
Yes, sir, yes.
Yeah. So, I was just explaining that the way Gift City has been designed is that it covers 900 acres, whereas two-thirds is the domestic tariff area. The moment we discuss about Gift IFSC, people recognize that this is an international zone, but this itself is divided into two zones. There's a domestic tariff area and an international zone, which is into physical India, but even INR is not traded allowed in this particular zone. So, IFSC as an authority regulates the transaction which are carried out in international financial service centers. So, Government of India established IFSC as an unified regulator. Yeah. So, IFSC Act came into picture as 2019, but the idea of an IFSC was conceptualized in 2015 itself. But at that moment of time, the domestic sectoral regulator of RBI, SEBI, IRD, and PFRDA used to look into this particular zone also. But government thought that there should be a unified financial regulator for this particular jurisdiction, and that's what how IFSC came into play. And IFSC Act was passed all the financial institutions, financial services, and financial product within the IFSC zone. So IFSC is vested combined powers of all the four domestic financial sector regulators: RBI, SEBI, IRDA, PFRDA. So any foreign institution or any institution that want to do financial services into IFSC zone, they did not go into a separate regulator. There's a single regulator of an IFSC. This shows the what was happening before IFSC was there. So all the Indian issuers wanted to have a transaction overseas. They used to set up, they used to do transaction overseas, and all the intermediation services used to happen overseas. But the idea behind conceptualizing GIFT IFSC was that all the intermediation, like if Indian issuer is tapping the foreign market, the any transaction, like let's suppose intermediation services, the services of an intermediary, like so distributor, like lead merchant banker, debenture trustee, in case of fundraising, should happen in GIFT IFSC zone only. This was the goal of the IFSCs, to facilitate development of a strong base of international financial services in the country, and to promote IFSC as a dominant gateway for international capital flows. So there are this. So if we have to discuss like relevant to the topic, which says inbound and outbound investment. So what does inbound refers is that the capital entering into the domestic India, and international outbound is the investment, Indian investment into overseas jurisdiction. So earlier gift, whenever before the GIFT IFSC was conceptualized, it was all only seen India as a recipient of foreign capital. But now we are into global jurisdiction where GIFT IFSC is emerging as a zone of manager of foreign capital. So it's not only inbound, also the outbound. So we are looking into managing the foreign capital instead of just looking for FDI investment or an FPI float investment. So this is the major change what GIFT IFSC zone has done. And this has emerged as a regional and global hub for international financial services, and it provides a state-of-art unified regulator. So this is the first time where all the regulatory domestic regulatory powers has been given to a single regulator, and it provides a strong global connect with leading international financial jurisdiction also. So this was the vision of our Honorable Prime Minister when the GIFT City was launched. GIFT City was to be managed as a global nerve center of new age global financial and technology services, with a cutting edge digital infrastructure, and it provides an important gateway to connect India with global opportunities. So this will be the single source of connect to any global jurisdiction. So this is what the latest. This is the journey of IFSC zone. The first
I think there's some technical issue from sir's end. I'll just check it. So
yeah,
sorry.
yeah.
Sorry, participants, the speaker is just trying to reconnect again. There's some connectivity issue. We'll just resume in 2 minutes. Till that time, if any participants have any questions, they can drop the same in the Q&A box.
Sorry, I think so. There was some technological issue.
Yes, sir. Now it's fine.
I don't know till where I had gone, I think so. But still, I'll start from the gift IFSC journey. In just a minute, I'll just.
Yes, sir.
Yes, sir.
Till here we were with you. Yes, sir.
Yeah. So IFSC authority, as I said, the Unified Regulator of IFSC Authority Act was passed in 2019 and IFSC came into play in October 2020. So the moment IFSC came into play, we have just completed 5 years of journey of IFSC. At that point of time, we had 80 registered entities, and as on date, we have more than 1,000 entities have been registered with IFSC. This is the comparison of where does GIFT IFSC stand vis-a-vis domestic area and vis-a-vis foreign jurisdiction. So if you see like FEMA compliances. So as per FEMA, this particular zone, even being physically located within India, is considered as a non-resident zone. And if you see currency-wise, like domestic India, the INR is the currency permitted currency, whereas INR is not permitted in IFSC zone. And so you can see the comparison between similarity between the foreign jurisdiction and GIFT IFSC particular zone. Tax where is offshore. This is a tax holiday in this case, where 15 years out of 15 years, 10 years there are no tax on the business income, and plus there are no securities transaction tax and commodity transaction tax. Even capital gain tax are exempt, whereas in domestic area the taxes are applicable as per the law. The law for Indian jurisdiction with certain carve out has been given in the laws whereas applicable in India, and IFSC has been unified regulator in GIFT IFSC, whereas vis-a-vis separate regulator in the domestic India. So this is the business highlights of the GIFT IFSC. You see the number of registration has increased to more than 1,000 plus, and monthly turnover of IFSC International Stock Exchange is $87 billion. So sometimes it's like $100, $100. So in the last month, September month is what $87 billion. Banking asset, if you see, it's crossed $100 billion, and number of fund management entities. Paras will cover, I think so. Mostly we have reached more than 200 maybe today. And debt listing on an IFSC exchange is $67 billion. And we have seen a lot of interest in the sustainable aspect, ESG bonds. So out of $67 billion, almost 25% is sustainable ESG level bond. That's around 15 to $16 billion. Cumulative banking transaction till June is $1,508 billion. Aviation assets, we have seen a lot of interest where there are 303 aviation assets leased from IFSC, where earlier it used to be foreign jurisdiction. And total targeted corpus of AIF till September is $75 billion. Derivative transaction is $24 billion. So similar to the domestic area where we have two recognized stock exchange, NSC and BSC. So their wholly owned subsidiaries are operational in a separate form. So it's not the NSC or BSC which is permitted as an stock exchange in India, but their wholly owned separate subsidiary, separate entity has been operationalized in this particular area. Even clearing corporation also, we have two clearing corporation of the particular stock exchange. In case of a depository, since in domestic we have two depository, but in IFSC zone we have a single depository, that is India International Depository IFSC Limited. And on the capital market intermediaries, which will be required by the issuers who want to raise foreign capital, like and who wants to trade through an IFSC zone. So 120 plus capital market intermediaries has been granted registration from IFSC by IFSC. So these are the key entities in GIFT IFSC and GIFT City, which are operational from IFSC zone. So when we talk about inbound and outbound capital, so one is when what I spoke about is that inbound, the foreign capital being accessed by the Indian issuers. So that goes through so IFSC will work as a connect, as a bridge, let's suppose a bridge between the two jurisdictions. So on one hand, we have domestic India, and the other hand, we have the global jurisdiction, which can be any country. So GIFT IFSC will work as a bridge between two nations, and all the intermediation will happen in this particular zone where only the foreign investor will be investing in the Indian issues, but the intermediation, the services of an intermediaries will be availed through this. And what is the plus point into this? There was so many times a question being asked that why it has to happen through this, why it can happen overseas. The first and foremost is that the cost of operation will be very low vis-a-vis the foreign jurisdiction. The second is the job creation in this particular zone, and we'll have a single point of contact for any global jurisdiction. The second is the theme of topic of today's discussion is outbound capital. So outbound investment. So Indian investors investing abroad. So we have come out with a global market access framework wherein any Indian investors who want to invest abroad, they can invest through global access provider which has been authorized by GIFT IFSC. So like today, if Indian investors they want to invest abroad, the only immediate solution which is allowed, permitted, or which is done is that through mutual funds. But it has own limitation. There is a RBI limit and SEBI limit that $7 billion is the maximum limit which can be invested through mutual funds, 1 billion through ETF, and I think so most of them has exhausted that limit and there is no revision. But there's a separate limit of LRS limit which each individual hold, that is $250,000 in a financial year. So any individual wanting to have a global prospect to invest in global market, they can access that route and invest through the global access provider which are authorized by IFSCA. Now, as on date, there are six global access providers which has been authorized by IFSCA, and we have seen lots of news that people are into the moment the mutual fund or an ETF limit is breached, and they are not allowed, they are not permitted, or they want to invest but they are not able to invest. They go into the unregulated platforms. So IFSC is one regulated platform, so you can access through this. And so this is the background of a global access provider. So I see a CMI regulation provided for a global access framework. November 21, we came out with global access circular, and then we have revamped that, and we have come out with a consultation paper in May 2025, and August 2025 is an typo mistake. It's written 202, but it's 2025. We came out with a revised framework for global access. Post that, almost six global access provider has been given registration. What does global access provider gives? It gives an enhance. It provides an opportunity for broker dealers. So who are allowed to go given global access provider? So there are two entities. One is the broker dealer who is registered with IFSC, and the second is the subsidiaries of a stock exchange. So they can have a tie-up with foreign brokers registered, regulated anywhere in the global jurisdiction, and they can be a single point of contact for Indian investors who want to trade in global market instead of opening an account with multiple jurisdictions. Let's suppose a particular investor want to invest in 100 countries. So he need not go into 100 persons and open an account. It's a single point contact for him, so that he can do it through any global access provider which is registered with authorized by IFSC. It positions IFSC as a gateway for outbound investment. So for outbound investment, it's a single point contact, and it reinforces the regulatory framework to manage risk and enhance transparency. It also aligns with the international best practices. Onshoring the offshore transaction, which was done offshore, it will come into physical India, and it will develop the capital market ecosystem. So this is the particular flow chart, so as to say, if you see how global access will be tapped by the Indian issuers. Indian investors. So a client will be registered through so there's an introducing bonds broker concept, but you should, if the investors want to tap, they can just have an account with global access provider, and this particular global access provider will have an agreement with multiple foreign brokers or foreign broker where he can tap into any market. So whoever wants to access global market, he can do that. So there's the LRS limit that has been used by Indian investors in last 5 or 6 years. So it was $431 million in 2019-20. It has increased to 1.6 billion USD has been invested through by using the LRS limit. Uh, So this is the tax regime. So there's a tax holiday on business income for 10 out of 15 years. Minimum alternate tax is only 9%. And there's no commodity transaction tax, securities transaction tax, GST, stamp duty. Even so, Indian issuers tapping for an inbound investments through IFSC stock exchange. If they list their debt instrument on the stock exchange, which is IFSC stock exchange, even the withholding tax is only 9%. So this is also beneficial for an issuer or an investor perspective. Plus, I would like to also highlight that this 9% is the final tax to be paid by the overseas investors. So he need not file the return of income. That's the final tax liability for an investor. So that is also plus 1 point. Vis-a-vis, if you see, there's a 20% tax if the bonds are listed on other foreign jurisdiction. Plus, the cost of operation in IFSC stock exchange will be far, far lesser than the foreign jurisdiction tapping through the Singapore stock exchange or in London stock exchange. And for funds also, it's some competitive tax regime. There are further incentives under Gujarat GCC and ITS policy. So this is the overall journey of the IFSC. So we are going to project it as an our global gateway capital of a global gateway capital. To conclude, I would like to say that inbound and outbound capital through GIFT IFSC represent India's confidence in its financial architecture. It allows capital to flow freely, but under Indian regulation, Indian oversight, and Indian expertise. GIFT IFSC is not just bringing global finance to India, but it is also taking Indian finance to the world. With this, I concluded. Thank you. So I think so. Paras is with me, so he'll cover the next aspect of the funds journey.
Right. Thank you, sir, for the brief introduction of GIFT IFSC, and thank you, ICA, for inviting me. So I will be covering fund management at GIFT IFSC. Will we go through a bit of our numbers, like what we have so far and some big names that we have here, and then we'll move on to the how the fund management regime in GIFT IFSC and all that. So let's start. So our first management regulations came out in 2022. Before that, what was used to happen? The domestic regulators regulates the entities in GIFT IFSC. In 2019, the IFSC, as sir has said, came into picture, and we have a unified regulator here. But still the time the regulations were not there, the funds and everything are registered as per the domestic regulations. So first IFSC fund management regulations came out in 2022, and recently they are revised in 2025. In February 2025, we have a new regulations, amended regulations. So we have a policy of amending regulations and reviewing regulations every 3 years. So 2025 was the date, and I think today a few more amendments are going to happen in the regulations. And I think a month back there was a consultation paper on amendments in different regulations. So what the primary objective is to make GIFT IFSC as a fund management hub. So it is basically onshoring the offshore. So what the people are doing in, let's say, other jurisdictions like maybe Singapore, Hong Kong, Dubai, or Mauritius or KMS and everywhere. So they should be able to do it. It is like the Indian fund managers are going outside, and the market they are going to invest in India. So why not do that from India itself? So that's why the IFSC was created to onshore the offshore. So if you see on the slide, so we have three category of FMEs, and that we'll be covering later. And for the funds, so there are different other units that are also required, like trusteeship firms, custodians, fund administration, and law firms. So a whole ecosystem is present in GIFT IFSC as of date. So and we have today we have more than 330 funds that schemes that have been registered with the IFSC, and we have more than 200 SMEs, fund management entities that are issued with FSCA. So fund management vertical is one of the vibrant vertical of the GIFT IFSC. You see, this is a fund which we have different kinds of fund like PVC funds, hedge funds, and retail funds. So the retail funds is a very new space here, and we have around I think 8 or 9 retail funds that are registered. So going to the inbound and outbound, we have both type of funds. So inbound funds are like who are raising capital from the outside India but investing in India through the FPI, and we have also outbound funds. They are raising money from the Indian or resident Indians, and they are investing outside in global markets. So we have also retail funds that are investing outside by raising money from the retail investors in India. And the jurisdictions are mostly USA, they're investing in USA, they're investing in China and the Europe. So it's a new retail fund is a new thing that is going to take off from now. And we are seeing a lot of interest in the retail funds now. So these are few names of AIF. So we have DSP fund manager Kedara, Two Beacon, we have Blue, Light Rock, Vivriti Asset Management. These are in the venture capital and private equity funds. So we have hedge funds and long only funds. So if you see, we have mostly the funds category that we have some only have long only funds and the hedge funds. So we have the names of like Eravat, Morgan Stanley, Equitas, Alpha Alternatives, 3P Investment Managers, Alpha Grab. These all are here. If we look at the AMC side, which are the basically who are the mutual fund managers in India. So they also have a shop and they have a retail license like TSP, ICICI Prudential, PPFAS, White Oak, SBI, Baroda BNP Paribas we have here, and Franklin Templeton is also registered. On the credit side, we have RS, Oaktree, PAG, and New Asset Management. So I think the sir has already covered why GIFT IFC should be a preferred destination for uh, the managing the capital. But these are few things that I would like to cover. We have a unified regulatory framework. The IFSC is the single regulator here, and on the fund side of it, the flexibility of leverage is allowed. So you only have to disclose that how much leverage you are going to take, and you can simply avail that. So there is something new co-investment. Recently we have came out with the SPV guidance. We will covering it later also. Now we have a Suites portal. It's a single window IT system where all the applications are filed through Suites itself for the FMEs as well as the schemes. So, and for foreign investor, there is no PAN requirement for the foreign investors, and we are very cost effective jurisdiction, and we have all our fund ecosystem is already there, and we are very pro business jurisdiction. So we always take feedback from the industry, and we move forward and how to solve the existing issues if there are any, and we will be incorporated in our regulations and circulars. So let's move on to the type of fund management entities that can be here. So in our regulations, there are three kind of fund management entities that can be incorporated. One is authorized FME, registered FME non-retail, and registered FME retail. So these FMEs have different type of capital requirements. They can launch different types of schemes, and the compliance varies. So we're covering all of that. So for the upsized FME, they can launch kind of venture capital schemes or family investment funds. They would be investing in schemes, investing in mostly startups and everything which are very recent companies. So, and for the registered FME non-retail, I would like to point out like what the registration do we have till around more than 200 FMEs that are here. Most of them, I think, would say most 80 to 85% FMEs are in registered FME non-retail category. So it is, I think, more favored one by the industry. So they can launch restricted schemes and they can also do the PMS. They can also provide PMS to the clients. So they are mostly targeting sophisticated investors and they can offer funds through private offerings and portfolio strategies. Registered FME retail is the highest part. So the thing is, as you move from authorized FME to registered FME non-retail to registered FME retail, so you can do the activities that are done by the previous one. So for example, the registered FME retail can do all the activities that can be done by authorized FME and registered FME non-retail. So the retail FMEs can launch retail schemes, they can make offer to public. So this is the highest category that we have here. So they can cater to the broader investor base and to the retail investors. They have different criteria that we will be covering later. These are for the FMEs, we have a risk-based approach. For example, the upsize FME, the minimum investment is defined as $150,000. So what we consider them is these are the sophisticated investors. They know like how to, they know the basics and they know the everything. So the compliance part is less for the outside FMEs. So as you move up, the compliance increases, so the risk also. So that we have a compliance, we have a graded compliance framework. So based on the activities that you are pursuing, the compliance is according to that only. So that is the eligibility of FME means they have certain criteria, certain things that the FME has to meet. So first is the net worth criteria. Fit and proper is same for everyone. You have to be fit and proper as per the regulations. So net worth for the outside FMEs, you have to invest infuse at least USD $75,000. For registered FME non-retail, it is USD half a million, and for registered FME retail, it is 1 million. Those entities which are coming in a form of a branch, they don't need to infuse a capital here. They can earmark the capital at their parent level. And for the legal structure, outside FME can be in the form of company, LLP, and branch. Same goes for registered FME non-retail. For the retail part, they can be only a company or the branch thereof. And they have to have at least 4 directors, and at least 50% of them should be independent directors. For the FMEs that are setting up here, we need a substance. So the persons have to be present in GIFT IFSC while managing the operations. So for the outside FME, the minimum requirement is 1 KMP. We call them key manager persons. For the registered FME non-retail, it is minimum 2. For registered FME retail, it is 3. So 3 people should be have there. But these are the background. For the registered FME retail, there is something that need to have a track record. So the any entity who is taking registration as a retail license, they must have a 5 years of experience in managing 5 years of experience in managing AUM of at least $200 million, and it should have more than 25,000 investors. So it can be either by the parent company, means it's coming in branch form, or the holding company of the entity which is coming in GIFT IFSC. And if you're setting up in a form of a branch, it has to be registered with the parent company should has to be registered with a financial sector regulator in whatever jurisdiction you are there, and it should be a FATF member country. So I was talking about substance earlier. So you have at least 1 officers, 2 officers, and 3 officers. So we have a substance requirement, a mandate substance that the persons who are to be appointed by the FMEs must be presented, and there are certain criteria they should be meeting to be eligible for the appointed as a KMPs. And it should be the FMEs who are there. They should have infrastructure which is commensurate with the size of their operations. These are the 3 kind of schemes that you can launch. These FMEs based on their category they can launch. So venture capital schemes can be launched by all the 3 FMEs that we have means covered earlier. For the restricted scheme, the registered FME non-retail and registered FME retail, they can launch restricted schemes. But the retail schemes can only be launched by registered FME retail. So in there is a minimum ticket size for the investment. So for the venture capital scheme, it is $250,000. For a restricted scheme, we have 150,000. And for the retail, there is no restriction on minimum amount of capital. But if it is a close-ended and there is investing in 50% of the AUM is invested in unlisted securities, then the minimum capital size should be $10,000. But we have a separate regime for accredited investors. So there is a circular on accredited investors where if a person is meeting certain criteria, they can be labeled as accredited investors by the FMA itself, and they can come under the regime of accredited investors. So the threshold decreases when you are an accredited investor. For the schemes that we are in, that is the non-retail schemes, we have a green channel. So you can file the documents with us as per the circular that we have released on April 5, 2024. And once you have submitted all the documents and everything we have, you can immediately launch the scheme. It comes under green channel. For the number of investors in the venture capital schemes, you should be having at max 50 investors, and for the residential schemes, it should be more than 2 and less than 1,000. For the retail scheme, it should be at least minimum 20 investors. So now there are open-ended, close-ended schemes. Venture capital scheme can only be close-ended. Restricted schemes can be closed and open both. And same goes for the retail schemes. And the tenure of the close-ended can be increased as per the voting of means from the mandate of a two-third of investors by value. There is a fund regime. So the legal structure of the schemes that are setting up in GIFT IFSC they can be in a form of company, LLP, or trust. And we have a certain means maximum cap on holdings by the as per the scheme. So in the venture capital schemes, there is no limit on maximum one investor is holding. But for the restricted scheme, only one investor can hold maximum of 50%, and for the retail, it is only 25%. So the minimum scheme size is $3 million. So the thing is, you have to raise $3 million in a year. But you can start your operations, you can start deploying funds, commence investment activities after raising only 1 million. But within a year, you have to raise $3 million for the scheme. And as we talked about the leverage is allowed subject to the disclosure in your offer document. But in the retail scheme, that leverage is not allowed. You can only borrow the money, and that to make only meet the temporary liquidity requirements of 6 months. So investment diversification norms. So we follow mostly the disclosure regimes. You can invest as per the permissible investments as per the regulations, and you have to only disclose. But for the retail scheme, there is more. Obviously, these are retail investors, so some limits are there. In the single investing company, you can only invest up to 10% for the retail scheme, and for the sectoral cap is 25%, except in case of sectoral or thematic funds. So this is something new that we have come up with the third-party fund management services, and we are seeing a lot of interest in this area. So third party is also known as a plug-and-play model, where the FME can be only FME is registered here, but a fund which is not of the FME but for some other party, they can just come and know their fund through the FMEs. So for the FME who are providing the third party services, this should be in a form of either a company or an LLP. So we have some substance requirement for each scheme for their managing. The principal officer is mandatory, means if one scheme they are providing third party services to a single scheme, then a principal officer should be there for that scheme. But if you are in a non-retail category, the compliance officer can done the compliances of multiple schemes in the same thing. But if you have a retail, you have a retail license, and you are providing third-party services, then there has to be a separate compliance officer. So the schemes which are launching under the third-party fund management can have a maximum AUM of $50 million. And for all the FMEs who are providing those services, they have to infuse additional net worth of USD 5 lakh or a $500,000 US dollars. So this is something new, and we have around two entities have taken license under this to provide the third-party fund management services, and there are many in the pipeline. So this is something that the IFSC is catching up on that, and it is very common in other jurisdictions also. So we have a couple of months back, maybe we have come for co-investment by venture capital scheme and equity scheme. So these are the we call it special schemes, or the where the existing scheme can co-invest along with other investors in a single portfolio. So whoever the FME is providing these co-investment services should can be in a form of company or LLP or a trust. So who can provide those co-investment services? Those funds which are already optionally have the venture capital scheme or the restricted scheme, and they have to hold at least 25% in the equity share capital or the interest or the capital contribution. So the idea is that the scheme which is in GIFT IFSC should have a skin in the game, that is has to be minimum of 25%. And the category of scheme where they can means the special purpose vehicle will be like a separate special scheme. So it can be of category 1, 2, or 3 as per the pay, you can say mother scheme. And the investment should be happen in a single portfolio. Only single portfolio company is allowed. And this is something that filings. So we want to make it quick. Like the investment should doesn't need to wait. So what we have done is you can make the scheme, you can make the investment, you can make a term sheet on that, and you have to file it with the IFSC within 45 days of investment. So you just notify us that you have done this and that, and you file the term sheet within 45 days. So it is a kind of ease of doing business that we are doing here, that because there are certain investment that can't wait, and it has to be there. So this is something new, the third party and the co-investment that we have here. This is the typical AIF structure. There is a typical fund structure that are in GIFT IFSC. If you say it is a IFSC fund and it is the FME registered with IFSC. So what happens is we manage, unlike SEBI, we register both the fund manager and the fund in GIFT IFSC. So first you have to take a registration for FME. Once you set up an FME, then you can launch a fund under that. So that this FME is there, it can launch a fund. It can take money from the Indian investors as well as foreign investors. But the thing is, if you're taking money from the Indian investors, you can't invest back it in India. You can only invest it in global markets. So a foreign investor money can come in, foreign investor can invest in any fund in GIFT IFSC, and they can invest anywhere. So the foreign investor is the person residents also of India. This covers also NRIs and the NRIs and the Indian investors. When they are making investment in GIFT, say GIFT IFSC, they are subject to FEMA rules. So the GIFT IFSC is a offshore jurisdiction from the perspective of FEMA. In GIFT IFSC, within inside the zone, the FEMA laws are not there. Means there's a carve out on FEMA laws. But if you are from are an Indian investor and you are moving money to GIFT IFSC, even though it is present physically in India itself, but from the FEMA perspective, it is outside. So it will be akin to like you are moving money outside India. So if you are moving money, let's say to Singapore, and moving money to GIFT City, it is same for the Indian investors. So this is the IFSC fund. It can means take money from the Indian investor, foreign investor, and it can invest in different securities. So we have a permissible investment in the regulations. Let's say they can also invest in units of other AIFs. They can invest money in security that are in companies that are set up in IFSC or outside, and they can also invest money in the securities that are listed in IFSC or the companies that are incorporated in IFSC. So this is the general framework. This is a typical AIF framework that the entities in GIFT IFSC, fund management entities in GIFT IFSC follows. So with this, I would conclude that, and it is I have already covered like how can you register. We have a SWITS portal. So just you have to identify the office space, and the switch portal it goes for both SCZ team and the regulatory team. So this the switch portal is the solution for everything now. And once the FME has set up, then you can launch a fund through switch itself, and it is under green channel if it is not a retail fund. So with this, I would conclude, and thank you. If you have any questions, you may please put it in the chat box. Thank you.
Thank you so much for your presentation, sir. We will now move on to see Ashok Kumar Singh's presentation. I don't think we have any questions for Pawan sir or Paras sir, so I think we can move on to the next speaker. So I would like to briefly introduce Ashok sir. Ashok sir is the Chief Regulatory Officer and Chief Risk Officer at the BSE Limited. He is a qualified chartered accountant and a company secretary, and he also holds DISA from ICI and a postgraduate diploma in securities laws from the Government Law College, Mumbai. With over 17 years of experience at BSE, he has extensive experience across the full spectrum of listing and compliance matters, including IPOs, QIPs, schemes of arrangement, debt listing, delisting, and LODR compliances. He has worked closely with SEBI on drafting and implementation of key regulations, including the SEBI LODR 2015, REITs, InvITs, NCRPs, and serves on various SEBI committees. So I welcome you to the webinar, sir, and hope to have learn a lot from you today. So over to you.
Thank you so much. I'll just share the PPT.
Yes, sir.
Is it visible?
Yes, sir. It's visible.
Okay. Thank you very much, CA Institute, for having me here. First, I will start with a small correction in my introduction. I'm not the CRO and the Chief Risk Officer of BSE Limited, but I am the CRO and the Chief Risk Officer of India INX, which is the subsidiary of BSE Limited and which is the exchange here in GIFT IFSC. So, thought to just have a little correction, being we are chartered accountants, so be particular on the law side.
My bad, sir. My bad.
No problem, no problem. So, this is the structure in which we are working. BSE is our holding company. It has subsidiary, which is an exchange in IFSC, India INX. And then as an exchange, you also need to have a clearing corporation. So we have India ICC, which is the clearing corporation. So stock exchange related functions are handled by INX and clearing is handled by the clearing corporation ICC. And then we have INX has a wholly owned subsidiary, which is the India INX GA, Global Assets, which Pawan sir has covered in quite detail, which provides investment opportunities in the overseas market for the resident Indian. So if I have to sum up the presentation of Pawan sir, the India INX is for the inbound transaction mostly, and GA is for the outbound transaction mostly. And we all are regulated by the IFSC. This is a BSE as an institute as a glance, but considering the time which we have, I will rather focus on what we are going to offer here in GIFT IFSC. So just for the viewer, I have included this slide. And the good part of speaking after Pawan sir is that many slides I can skip, so that because this is so nicely covered by him, so that I can focus only on the listing side. So like Pawan sir I explained, I will just quickly touch upon this slide. See, the question is asked why there was a requirement of having a stock exchange in GIFT IFSC when we already have stock exchanges in domestic side, BSE and NSE that way, and other stock exchanges which are there. So the basic feature which we have is that the trading happens in this stock exchange in 15 currencies, and Indian INR is not one of the currency which is permissible for the trading purposes here. And the question is whether INX, India INX, is going to compete with the stock exchanges which are there in domestic market. Answer is no. We are here to compete with the international stock exchanges. For example, in our CA days when we used to study what is the foreign currency convertible bond, what is the ADR, GDR, and where they are listed. So we used to hear these names: Luxembourg Stock Exchange, London Stock Exchange, Singapore Stock Exchange. where Indian issuers were listing their depository receipts or bonds. So this stock exchange is a solution that instead of going to the stock exchange outside, this can be listed in this jurisdiction here, which is created within the India. And like Ponsar was saying, this IFSC, International Financial Services Centers, is considered a outside zone, a foreign jurisdiction within India. It is as much foreign that if you have to enter in IFSC's zone here in GIFT City, you have to cross the custom barrier and the other things sir has already covered. Now, since we have to promote various things, the government has this vision of taking India to the level where we are, this IFSC is taken at par with the international players, and therefore a lot of concessions were given. The concessions which are given are, the upper line is those which are in perpetual in nature. If the securities, for example, equity, which is I'm going to cover, going to be get listed here, you trade in equity shares, security transaction tax is zero, commodity transaction tax is zero, capital gain for NRIs is zero if they trade on the products which are available in the GIFT IFSC. Stamp duty is zero. Then tax holiday for the entities which are set up in GIFT IFSC is 10-year tax holiday. And then, and that is within the bracket of 15 years, you decide 10 continuous year out of the bracket of 15 years. MAT is 9% only, and withholding tax is also 9% as compared to 20%. But the tax part I will leave to my expert friend and move forward. Business highlight, like I was saying, is covered by Pawan sir, so I'll just skip. So let's come and let's discuss what the India INX is all about. So we were the first stock exchange, and we were inaugurated by our Honorable Prime Minister in 2017. And he has this vision, which I just explained you, to set India on the global radar as a price setter, as a front stock exchange for the all global needs. So we are the first stock exchange. We have listed around more than 160 debt instruments. We have dedicated green bond platform. Going forward, so coming to the stock exchange business per se, what are the products which are available here? Equity, I will take a little time because that will allow me to skip my subsequent slides. Till now on the stock exchange platform, only bonds are listed, which are the second tab. And we are also offering derivative products, which I will cover in detail in next slide. But focusing on the equity side, till now, equity shares are not listed on any of the stock exchanges here in GIFT IFSC. And there were certain challenges because of which Indian entities were not allowed to list their equity shares even in any other stock exchanges. So when you talk about X companies listed in NASDAQ or Y companies listed on another international exchange, they have actually listed their depository receipts on those stock exchanges because our Companies Act was restricting Indian corporates to get listed overseas. So then the amendment happened after the announcement made by our Honorable Finance Minister. The Companies Act was amended. Then the rules were introduced in the Companies Act because the Act is permitting. There was requirement for the similar enabling provision in FEMA. FEMA notified the direct listing scheme. FEMA rules are amended, followed by the amendment in SCRR, and then followed by the revised listing guideline by the IFSC. This is how the entire equity structure has been framed. Now, companies for listing equity side, they can come up with the initial public offer that is totally unlisted company, and these companies can be from India, means Indian corporates, unlisted Indian corporate. Instead of wanted to go to the stock exchanges in domestic, they may decide to come and get listed on the stock exchange here in GIFT IFSC INX. Direct listing of equity shares of the entities, companies which are listed on the stock exchanges abroad, they can directly come and get listed over here. Direct listing is used little differently in domestic jurisdiction, so here it is a different thing. Follow-on public offer, of course, that can, once you are listed, you can do FPO, you can do offer for sale, and once you are listed, you are in need of fund, like happens in the domestic market, you can come up with a qualified institutional placement to offer shares and fundraising. Preferential issue, one of the favorite mode of raising quick money by the listed corporates in domestic market. That is also available here, rights issue. So the further fund need of the corporates can be fulfilled by the way of subsequent issuance. We have foreign currency denominated bonds listed over here. We have equity derivatives here. We have commodity derivatives here. We have around 120 single stock futures over here. This is the tax part, which basically tax part I will skip, but other things I will cover. I have already discussed that. The Pawan sir has also very nicely discussed that we have zero STT. GST is zero. So suppose I buy a computer over here, I need not to pay any GST. That is the value which has been given to the entities which are operating in IFSC. No stamp duty. Now, for the resident, if they want to open an account, they can open an account here without mandatorily having the PAN. The important thing is that since these are the stock exchange with the vision to have a global presence, trading in India INX is permitted 22 hours, unlike in the domestic stock exchanges. Here, trading permitted under 22 hours. Okay, so only 2 hours is the break, which is for the EOD activity for the previous day and start of the day activity for the next day. So assume an investor sitting in the time zone, say for example US, he can come and trade on the stock exchange. The person sitting in Japan, he can come and trade on the stock exchange. Of course, Indian participant, they can trade on the stock exchange. So this is one of the important feature that we have. So I'm sure that the participants are aware that the Sensex future and options are among the most traded derivative products in India. Same Sensex future and options are available here in GIFT IFSC with a tick size of 1 USD. And like I was saying, in the domestic market, it is traded in rupee denomination, but here it is traded in the USD denomination. And the beauty is that it is available 22 hours in a day. This is a process which I will skip because I want to more focus on the other slide considering the time frame. So a brief summary of what we are doing here. So like I said that we were the first stock exchange to be inaugurated by Honorable Prime Minister. And we are also leader in terms of the listed products. We have over 83 million MTN program established with us and turning around in the around 67 billion plus value of bond which is getting listed over here. Out of that, 59 are the unique issuers. And if we talk about ISN, around 161 plus ISN are being listed at present here. So basically people are raising money from abroad and issuing debt securities that get listed over here, and they enjoy lower withholding tax of 9%, which I was covering. That is the reason people are coming here. And these are the sum of the name. If you see this slide, you will find out the issuer, bond issuer, debt issuers, which is always considered as a market much more bigger than the equity market. The main issuer, they are already present here in IFSC. These are the some of the name which I wanted to just highlight, but I'll discuss more on this. So this slide I was talking about. So it came with the announcement by the Honorable FM in 2023, followed by amendment in the Companies Act. Section 23 was amended, which now enables Indian corporate to get listed in the permissible jurisdiction. So they cannot even today get listed on the foreign stock exchanges, but they can get listed on the stock exchange which are here in GIFT IFSC, because this has been defined as a permissible jurisdiction. The equity shares of Indian corporates can be listed. Same way, foreign companies can also list their equity shares. So once Act are aligned, they issued the rules under the Companies Act, which is called LEAP rules. That was issued in Jan 24. Same day, FEMA also notified the direct listing schemes, providing both LEAP rules and FEMA are broadly the government-related regulatory framework for Indian corporate to get listed here in GIFT IFSC. Then the best relief which the IFSC got is amendment in SCRR. See, we all are aware, I'm sure, that if a company need to be get listed in domestic stock exchange, for example, our holding company BSE, the thumb rule under SERR securities contract regulation rule is that minimum 25% need to be offered to the public through the offer document. Of course, if the company is a much bigger in size, you can offer less than 25% and still get listed on the stock exchanges. But the thumb rule still remains that one day you have to reach to 25%. So 25% is the thumb rule, exception given, but still the thrust is that one day you have to achieve 25%. Here, the law has been amended. Now, only with the 10% dilution, the company can get listed in stock exchanges in IFSC. And there is no need to raise this 10% public holding to 25%. So 90% with the promoters, 10% with the public, and that company can continue to get listed with the same kind of shareholding pattern. That is the, in my view, best relief which the IFSC has got for Indian corporate to get listed over here. We have also seen, followed by this, the IFSCA, which were also having their own listing regulations, but that was revised, and we work together to frame the very liberalized kind of listing regulations for listing at the same time, at the same global standard of equity shares. And we have seen the first DRHP being filed with the stock exchanges here in GIFT IFSC of a company incorporated in India under Companies Act for listing as equity shares in GIFT IFSC, that is XED Executive Management Limited. This is a 12 million USD issue size, and very soon we may say the opening of the issue. So I think I have already covered that which company can get listed over here. These are the companies which are incorporated in GIFT IFSC. These are the corporate which are incorporated in India, means Indian companies, and the companies which are incorporated in a foreign jurisdiction. They can come and get listed foreign jurisdiction incorporated company. They can get listed as a unlisted company through IPO, or they can also come and get listed through the direct listing route, wherein they are already listed on other stock exchange and they can come and get listed over here. These are the numeric criteria. FEMA and LEAP rule, of course, all companies has to comply. And the general hygiene checks which are there are already here related to debarment and all. Revenue related tests are there. And it's a very, I will give a view that it's a very liberalized kind of structure related to the revenue criteria, because the consolidated audited operating revenue of only 20 million makes you eligible to get listed over here on an average of 3 years. Same way, post-tax profit of USD 1 million on a consolidated basis. And if not meeting either of the two criteria, there is another criteria is the post-issue market cap of 25 million USD. With these criteria, companies can come and get listed over here. So I will touch upon a little more thing. So there are two thoughts. One company which are totally Indian company, totally unlisted, that can get listed over here. But the company which are already listed on domestic stock exchange, they can also come and get listed in GIFT IFSC stock exchanges. But since this is already listed in the domestic stock exchange, there are certain things which are still need to be ironed out. Once that is done, then this route will also be open for the listed corporates in domestic stock exchange to come and get listed over here through FPO route. Some of the things which you need to know is that, because if that is going to happen, as and when it is going to happen, the same company will be traded in a rupee denomination on the stock exchange in domestic, and in dollar denomination, for example, for the stock exchanges were in GIFT IFSC. So there is no fungibility of the equity shares which will be traded here in GIFT IFSC vis-a-vis the shares which are traded in the domestic jurisdiction, because here the trading will happen and settle with the securities which are traded in dollar denomination, and the trading which is happening in the domestic stock exchange will be settled and traded over here. Point I'm trying to make it here is that it is provided in the law that it cannot happen that you buy in dollar denomination and go and sell in the domestic market in your rupee denomination. So therefore, the reverse fungibility is not allowed. That is the mode on which the framework is being built for the listing of the companies which are already listed on the stock exchanges in domestic side. But yes, certain other regulatory framework are yet to be ironed out. So both SEBI and IFSCA team has formed a committee. We are part of that committee and we are working on that. But today, when we are talking, unlisted companies can get listed, and we have seen that the DRHP is already filed. So, like I was saying, that the big relief which Indian corporate got, and I would say the GIFT IFSC and me as a stock exchange, we have got, is that only 10% dilution and company can get listed, promoter can hold 90% with them. That was the biggest relief in my voting side. The other relief is that because I have covered in my previous discussion that we are competing with these international stock exchanges. The law which IFSCA has framed, they have kept in mind the international standard, what is happening for the equity listing in the other jurisdiction, because we are not aiming only Indian corporate to come and get listed over here. We are also aiming corporates from other jurisdiction to come and get listed over here. So therefore, the challenge which IFSCA had is to have their regulatory framework up to the standard wherein we are in competition with the international jurisdiction, and therefore these points are included in the IFSCA regulations. And let's see, no minimum number of investors are prescribed. For example, in domestic market, 1,000 investors or 500 or 50 investors, depending on the kind of board, main board or SME platform you are getting listed. Here, no minimum number of investors are prescribed. So maybe say if you have investors ready, maybe 15 investor or 10 investors, you can get issue subscribed. That is allowed. That is the biggest relief, I said. Now, issue can open minimum 1 to 10 days. That's fine. The next relief, in my view, because I have worked with BSE for 20 years in listed domain, was how you structure your issue. How much should be given to the QIB, how much should be given to HNI, how much should be given to retail is prescribed by SEBI in the ICDR regulations. And if you are not a profit-making entity and you are coming under regulation 6.2 of ICDR, you must have to give 75% to QIB, and if QIB don't subscribe to 75%, your issue is failed. That is the thumb rule, basically. Here, no such kind of restrictions has been prescribed by IFSCA listing regulation. It is only saying that you decide which category you want to give your shares, but whatever you want to tell the investor upfront, and you have to include in your DRHP. Same way, the allotment methodology, that proportionate basis or discretion basis, that is also a choice which is given to the issuer. You decide on which basis you are going to make the allotment, but again, on the same time, the choice you have to make upfront, disclose in the prospectus. So these are the things which have been given to Indian corporates to frame their issue best suiting to them, their market, their arrangements, and come and get listed over here. And if you get time, just please, I would suggest go through the IFSCA listing regulations. Unlike ICDR being a complete regulation, then post-listing compliances are covered in LODR regulation. That is another regulation which is followed by the master circular under the regulation. If you go and read the LODR regulation followed by the master circular issued under LODR regulation, it's a big literature in itself. Here, like we are competing with the international exchanges, the listing regulation itself cover the LODR regulations, and the compliance post-listing compliances norms are also being very competitive with the international standard, without compromising, of course, with the basic information, timeliness of the information, and other framework will need to be there. It has been made very light touch. So I think that the best effort IFSCA has made to put everything in the platter for Indian corporate to get listed. I would suggest once just go through, if not read out entire regulation, just go through the IFSCA listing regulation, and then I guess you will have an idea what I'm trying to say on the post-listing compliance side. This is the IPO process. For the sake of time, I will skip. This is the same way that you appoint a merchant banker, the bidding will open, and the rule says that Indian companies, they can get listed only through book building process. So why somebody would come and get listed Indian corporate stock of stock exchanges in IFSC, not on the stock exchanges which are domestic stock exchanges? Regulatory framework I had tried to cover up and give you a glimpse into how it is going to be for a companies coming in listing over here. The other thing is also depend on the business, the appetite of the company. If they are more appetite for the foreign currency, they are more into the foreign currency related business. This is the better place to come and get listed. You get investment in other foreign denomination USD, and you get traded in the USD, and the person can withdraw the money in US denomination, USD denomination. So the currency fluctuation risk is gone. Investors, again, if NRIs are investing in your company, the capital gain tax is zero. That is a big relief, which is not there if they are going to invest in your company, if it is getting listed in the domestic stock exchanges. I think Pawan sir has covered this global assets. I will very quickly touch upon. And so if you remember my first slide, India INX has a 100% subsidiary, which is called GA, India INX Global Assets. And we are the, like many other areas, we are also the first global assets provider in GIFT IFSC. So broadly, this is the outbound transactions which are going to happen, wherein the investors can invest in the securities in other jurisdictions. So what we have done, we have tied up the international brokers, and this is what we are offering. So the investor need to open only one account. They can buy foreign stock, they can buy foreign mutual fund, they can buy so many things. Derivatives are not allowed for individuals. This is allowed only for the corporates. So how this happens? See, RBI has allowed resident Indian, which Pawan sir has covered, to invest up to 2.5 lakh USD in the capital market account transactions. How to invest that was a little bit unorganized till now. So through GA, we have provided a regulated framework. Now, after new GA framework has come into the picture, like Pawan sir has informed, we have 6 global assets provider. So what we do, we provide the Indian investor an opportunity to invest in the overseas stock, bonds, funds in a totally regulated environment. That is the best thing that we are. So appetite has increased. You know, the world is looking towards India not only for investing purpose, but they are also looking towards India from the investor point of view, because we have a larger investor base. We have this habit of saving money and investing. So they are now so want to tap this kind of opportunity. So this is the opportunity for us through which Indian investors through GA by one single registration can invest in so many things. We also develop an online platform, a mobile app, sorry. So this is the process of clearing settlement, which is like a process related to any stock exchange operations. So I had rushed upon, I know, because the topic is such a vast topic that we need, I guess, at least half day webinar. I would suggest Institute to look for that. But still, I mean, whatever limited time I had, I tried to cover everything. And if there are any question, I'm happy to answer that. Thank you.
Thank you so much for your presentation, sir. It was indeed very insightful. I myself don't belong to this industry, but the way you've explained everything very beautifully. So thank you so much. We have one question for you. The question is, do we need to form company in Gujarat jurisdiction or in the IFSCA jurisdiction?
I guess this question is related to listing.
Right.
For the purpose of listing on stock exchange and GIFT IFSC.
Yes.
That can be anywhere in India. There is no restrictions. See, GIFT per se, though it is defined, it is spread in many acres, but we cannot have place for every company to come set up their manufacturing, set up that company over here in GIFT and then get listed over here. This is a financial service center, IFSC. This is the area which is providing you the opportunity of financial services. raising money through this area. So, for example, a company situated in anywhere outside GIFT, it may be in Ahmedabad, Mumbai, Haryana, Ludhiana, Delhi, Chandigarh, Punjab, anywhere, they can raise money, get listed over here, and that money can be repatriated to the places where they are. They have their factory, any part of India, and that money can be used over there. The only thing will happen that shares of their company will be traded then in dollar denomination or these currencies, 15 currency which we have shown. But there is no requirement for that company to be here in GIFT IFSC or in GIFT City or in Gandhinagar or in Gujarat only to be eligible to get listed in stock exchange and in GIFT IFSC. No, it's like which company can get listed at BSE. You get the answer. The same answer is for the companies which can get listed in GIFT IFSC.
Right, sir. Thank you so much. I hope sir has answered your question. One more question is there for you, sir. The question is, can Indian investor companies open account with you for trading derivatives of Indian or overseas markets?
See, this is a stock exchange. For trading purposes, the structure remains the same. You have to come through the broker. So in domestic market, we call them broker. Here in IFSC, we call them broker dealer because that is the word widely used in all jurisdictions. Now, anybody who want to trade on the product which are available on the stock exchange platform need to come through the broker dealer. And derivative products, I think they are talking that are allowed even through for Indian entities. It is allowed through the our GA platform also, but that is only for the hedging purposes.
Right. Okay, sir. One more question we have for you.
Of course.
Can a resident invest through a mutual fund which invests in US by this? An Indian resident can gain the market gains what one gets in BSE, and also when they cash, they get the forex gain as well. We can use this as a normal hedge as well as use the LRS limit.
More sounds like an investment strategy to me, but but see the funds even I mean even I'm investing in mutual funds. So the option that I see is the funds which are which are focused on the international funds, or they are focused on the foreign indexes. So that if you are investing in that, of course, you are getting the gain basis on the positive movement in the products which are overseas. If that products are on the positive run, then of course your mutual fund gives you gain. But since you are investing your rupee denominated money, then you'll get your return also in rupee denominated terms. Herein also, suppose somebody is investing through GA or global SS platform, they have to convert their rupee into dollar because limit is in 2.5 lakh USD. So first they will convert their money into dollar and then they will invest. Whatever gain they will have, they will of course have in dollar terms. And maybe that money, once they withdraw, it will again be converted in the rupee terms and will be credited to their domestic account. That is how this entire transaction will happen. So this is another investment opportunity, but the process remains the same.
Right.
Of course, they can have that money in their dollar denominated account here in GIFT IFSC banks, but once they are repatriating it, I think it will be converted into rupee.
All right. Okay, we have a few more questions for you, but if it's okay with you, can we move on to Amit sir's presentation and then get back to the questions?
Of
Does
course,
that work for you?
yes, yes.
Okay, sir. Thank you so much.
Thank you very much.
So we'll now move on to the last presentation for the day. We have with us CA Amit Kumar Kedia ji, who is a chartered accountant and a partner at the Gopal Sharma and Company with over 17 years of experience in finance and regulatory advisory. He specializes in fundraising, AIFs, capital markets, SEBI, and IFSC regulations. He also specializes in SME IPOs, forensic audits, and dispute resolution. He actively advises entrepreneurs and corporates on investment, structuring, compliance, and strategic growth, and is a regular speaker at the professional and industry forums, contributing to the capacity building and investor awareness initiatives. So over to you, sir. I hope from the domain expert himself, we're gonna learn a lot today. So over to you.
Thank you, Sunny, for the introduction, and thank you, Chairman, sir, and Vice Chairman, sir, of the committee for giving this opportunity, and all of the Secretariat for their efforts in arranging this very important session on the inbound, outbound investments opportunities at GIFT IFSC we professionals. Friends, just to start and just to add on and taking a privilege from Ashok sir for adding on like the last question which was taken in regards of the investments or like the company which needs to be opened. Sir have used all like majority of the states in India, but friends would love to add on that it is not the listings at IFSC's exchanges are not limited to Indian companies. Companies across the world can look for this jurisdiction to come and get themselves listed. In addition to it, I will just give just a small background of like countries like Singapore, UAE. We as professional might had seen their growth. We are observing their growth. But if any one of us have not enjoyed those growth or any of them have missed that buzz, GIFT IFSCA is an alternate, or you can say, an second opportunity which have been given to us as professionals. So it is not just the inbound and outbound investments where like the opportunity lies. The opportunity do lies with the intermediaries. Being an intermediaries, giving and advising them as professionals, becoming their key managerial person or their compliance officer, apart from the companies which would be and the funds which would be required for these professional services. Just to add on, we need to go through the capital market intermediary regulation, the FME regulation, the listing regulation to understand this ecosystem. So why I am using the word ecosystem is because you can just think of it's a parallel country. GIFT IFSC is not only a zone, it itself is a country which is in terms of land is part of India, but in terms of jurisdiction, it is not India. So you can imagine, you can visualize how big is the opportunity that a country in itself, a country is coming and getting developed. And there where the word ecosystem is coming in place, where in this ecosystem, as we see the merchant bankers, the exchanges, the companies, the custodians, the brokers which are there in India or any part of the world, this ecosystem would be created in time to come at GIFT IFSCA. So the opportunity is not restricted to the inbound investments and outbound investment, as very well told and detailed. It was discussed by Pawanji what is the inbound and the outbound investment, just for like setting up the background or setting up uh, a theme for like my presentation. Maybe it might be sounding bit repetition, but this is a bit like important, so I'm just trying to kickstart my presentation by understanding what inbound and outbound. So if any of these offshore investors through GIFT IFSC. So you can just understand the GIFT IFSCA the gift city as the new gateway of India, where the any fund which needs to come in or come go out from India would be utilizing this gateway. So any funds which looking forward to crop into India or Indian investors who look forward to go to global can use this IFSCA as the jurisdiction. The story started where, like, the prime minister of our country, then chief minister, was there in Singapore, and he saw companies, many of the startups have used these foreign jurisdictions for doing their international business. So any of the capital which would be coming from the offshore investors through IFSCA and would be invested into Indian companies or mutual funds would be termed or would be understood as an inbound. And in regards of the outbound, the domestic investors, maybe through the LRS route or through the OPI route, which goes to the foreign exchanges or to the foreign jurisdiction, would and is considered as a outbound. When we talk about these investors coming, they can come through in a form of an NRI, OCI, any of the foreign entity, which could be the government institution or foreign public sector, any of them. And in terms of the LRS route, these are 2,50,000 per financial year, which would be seen that the value which is available to be used outside the country. Maybe the residential investors, family office, institution, NRI, or foreign nationals can use this jurisdiction. So, moving forward, if we see these outbound investors, where these outbound investments are to be seen, then the non-resident Indian, the foreign portfolio investors, institutional investors, sovereign wealth funds, and like the other government funds, they can use this jurisdiction in terms of the investments which needs to be done. Now, while these foreign investors are coming, then what they need to see first and formally, as I have told, this gift IFSC is not a Indian jurisdiction. So again, these jurisdiction has not been an Indian jurisdiction. The FEMA guidelines would not be applicable for them. They would be treated as non-resident entity for the prospectus of FEMA. Just for like the repetition, I just tell once again, the land is India, but the jurisdiction would not be applicable as an Indian jurisdiction. For the income tax purposes, definitely it would be considered India for the resident Indians, but for foreigners, the non-resident, the FEMA would not be applicable. There would be some compliances which would be required in terms of setting up, in terms of opening up the bank account, in terms of the KYC which is required. That is a very easy process which have been made through the video KYCs. There are a lot easement wherein in the 11 jurisdiction, if any of the investors are coming from these 11 jurisdictions, they can opt for the video KYC. If they want, if they see that a physical KYC is required, they can certainly do that. In addition to it, if they give their documentation from the local uh, of ambassador from the place where the KYC could be notarized, then that would also be applicable through these KYC routes. So the net, it has been made in a very simple manner where these KYC's requirements are to be dealt with. Now, if we see in terms of the limits of these restricted schemes, then these restricted schemes have been dealt with in terms of the types as like being known to us. AIF category 1, 2, 3 could be the mode in which these schemes can come up. Apart from this, in terms of the investors, where their limits are required, if these restricted schemes are being coming, then the number of investors maximum could be in terms of 1,000, and the minimum corpus which is required for these schemes are of 3 million USDs. Apart from that, if the investors wants to invest, then the investor can invest up to 1,50,000 US dollars. And if the directors or the employees needs to invest, then they can come up with an investment of 40,000 US dollars. In case we see the angel schemes, then the angel schemes, again, they would be having a maximum investor restriction of 50. And in terms of the investors, the accredited investors undoubtedly would going to not have any limit. For the investors, there would be a limit of $250,000 in case of the venture capital scheme, and for the angel scheme, the limit would be 40,000 US dollars. Again, for the retail schemes, they can come up with a retail scheme with a minimum corpus of $3 million. In regards of the investors, there would be no limit. But in case the scheme is investing in the unlisted space, then in that case, there needs to be a limit of 10,000 US dollars, which needs to be taken care of. So again, if we see the investments, these investments can be done in form of a REIT or an InvITs. Again, in this place, if it is going for a private placement, then minimum 1,50,000 USD investments could be made, and if it is a private placement which is without listing, then it needs to be minimum 2,50,000 US dollars. There could be other avenues like the ETFs, the special situation funds, PMS, the family fund, direct investments through foreign securities, which could be the other investment options which could be seen. So now, what we here look forward to understand that these type of structure, maybe the foreign portfolio investment, foreign direct investments, or foreign venture capital, the incorporation of these entities at IFSCA can be utilized for the funds to be invested in India, or if they create this entity here and invest these funds across the world, then they can also see this as a opportunity. So now many of the funds, the jurisdictions which we are talking about, the UAE, Singapore, Mauritius, Luxembourg, US, they are now seeing this jurisdiction as a jurisdiction to shift their working, and from shifting of their working to this jurisdiction, they are looking forward to do their global business from IFSC jurisdiction. So again, this, as told, it's becoming an international jurisdiction where not even in taking bringing money to India, this money could be these funds can deploy money across the world. I think the taxes a little bit was touched by Ashokji and Pawanji. Just maybe like it may be bit repetition, but just to like clarify things more in detail, I will just go through it quickly. So, in terms of the corporate tax, again, there is zero corporate tax for 10 consecutive years out of the 15 years which is there. So the SSC can choose any of these 10 years from the block of 15. So if I'm choosing from the fourth year, then fourth year to 14th year, they would be the years which would be in terms of my tax holiday. There is a buzz which is going around that this tax holidays can be increased to an extent of 25 years, but it is a discussion as on date. For the MAT, it is like again 9%. There is no goods and service tax, that's its GST. In terms of stamp duty, again zero stamp duty, no commodity transaction tax, and there is a zero capital gain which is there. Again, for the zero capital gain which is there, there are some of the notified securities in which these investments are being done, and for these notified securities there is no capital gain taxes which is applicable. This is one of a very beautiful tax initiative which is there, where in the category 1 and category 2 AIF, it is absolutely a pass through mechanism. So again, it would be dealt with as a pass-through mechanism for category 1 and category 2 AIF. In regards of the category 1 and 2 AIFs, where the taxations are at the investor level, in regards, they would be again exempted for the non-resident incomes. For the resident, they are for the non-resident, they would be again exempted from the PAN, and there would be no resident exempt for the capital gain which have been notified by the CBTT. For the ETFs, again, there would be tax exemptions, which is there in regards of what is there in the aspect of the Companies Act, where these entities have been incorporated, and these entities would be treated as a category 3 retail scheme, in which there would be no these incomes would be transfer would not be treated as a transfer, and it would be exempted. Apart from that, these income, if these ETFs makes income from the security taxes, again they would be exempted. In terms of any transfer of these securities which has been done by these by the shares of these companies, they would be exempted. For the transfers of shares in the Indian companies, if it is not there, then in that case, they would be charged as a tax, which is like charged to a normal resident. In case of the long-term capital gain, it would be 12.5%. For the dividend, it would be 10%, and for the short-term capital gain, it would be 20%. And if the STT is not being paid, then in those cases, it would be 30%, which would be the taxability. There are some additional exemptions for the non-residents, which are there. There are some additional I need to go a bit fast because I think so I'm short of time, but I would try to capture it. So there are some additional exemptions which are there for these non-residents, for the portfolio manager and administrators on behalf of these residents. Any income which have been accrued or arised from India, they would be again not be taxable in regards of any amount which is being received from maintenance of these banking offshore units, which are being referred as per section 80 LA, then LA 1A, then again these additional exemptions would be allowed. Now, if we see the outbound investments, that is, these residents in India can come and invest as they invest in the domestic market through GIFT IFSCA for the world over. They can, there is no restriction which are there in terms of doing investment to an extent of the threshold limits which are there, but these investments can be done. Now, there are a lot of mutual funds which are coming dedicated to like investments in China, investments in US, investments. So these various Indian mutual funds are now opening their shops at GIFT IFSC, calling upon the Indian investors and investors outside the world to invest in these mutual funds, where these mutual funds would again going to invest to another country. So that there where these opportunities of this outbound investments get created. So any resident individual, they can take an opportunity of getting themselves as an one of the investors in these uh, securities. Listed Indian companies can use this forum. Unlisted entities can use this jurisdiction. So, if we see for the individual, there is a restriction of $250,000 per annum. We would be discussing in detail later on. For the overseas portfolio investments, these investors, apart from the individuals and the overseas direct investments, which could be made, the overseas portfolio investments can be done, can be dealt with. Herein, you need to understand that these listings, they need to have a minimum 50% of their net worth, there where the threshold is to be seen, as compared to the ODI, where the threshold is 400% of their net worth. So three thresholds needs to be seen for these three people. For the resident individual, it needs to be 250,000 US dollars that could be invested. For the overseas direct investments, for the ODIs, it needs to go for the 400% of their net worth. And other than that, if any of these investments are being done by these OPIs, then it needs to be 50% of their net worth. So I have tried to explain this 250,000 in regards of like what could be the outbound investments which can be made by this threshold of the LRF, wherein if we see 10 lakh rupees in terms of US dollar, around, if we take 89 as the conversion rate, around 11,000 US dollars would be exempted from this 20%. The rest there would be a 47,753 rupees, 53 US dollars TCS, which needs to be payable. So if we net see, if we need to do an investment of $250,000, then we need to remit 2,97,753 to our bank, and this bank would then, after deducting TCS, they would be allowing 2,50,000 US dollars to invest. Friends, here you need to note and understand any of the payments, like any of the medical payments or any of the loans, education loan, if such payments are being done, then in that case, this limit would be reduced to that extent the payment have been done. That needs to be taken care and to be understood with. Moving forward, there would be KYC requirement, which would be which is required to be done. PAN, Aadhaar, ITRs, a normal KYC, you can say, which is required to be dealt. That is to be done. So where the avenues are, the listed foreign securities which are there, which are getting listed, entities through the global access could be the investments could be accessed by the global access platform. Any of the foreign schemes which are coming, foreign products, scheme, mutual fund, any of these such products, then the access could be done. The investment avenue could be dealt with, or you can say the investment avenues could be nurtured with. If we see the exchange platform, the investments could be done through the exchange platform or through the global access platform. That was very well taken and detailed by Ashokji. So for like the saving of time, I'm just skipping. LRS, I have dealt in detail. In terms of the income tax treatment, the gift jurisdiction for India, Indian would be treated as an Indian territory, as told by me previously. For the tax purpose, it would be treated as an Indian territory, and whatever the standard rules of tax are applicable, that would be applicable for the Indian resident. So, whenever we would be calculating the taxes, then we need to consider the provisions which are there in the Indian tax laws. So, what are the benefits? So, if we see the currency hedge or like the currency appreciation, that can be enjoyed by the global investments. Uh, Diversification of the portfolio across the world could be one of them. Non uh, non-involvement of just the Indian market, but the involvement of the world market, the global market could be the opportunity. So with this, I thank the committee once again and would be happy to take if any questions are there. So thank you very much for giving this opportunity. There are some questions. So by the time like we are there with the moderator, we can take these questions. So the question is, how is investment in US stocks through IFSC different from investing through money from domestic investors? Okay, I am not getting the question. IFSC registered fund manager manage the AIF registered in India with SEBI. Can IFSC registered fund manager manage the AIF registered in? So as told, these two jurisdictions are in itself independent. SEBI have a jurisdiction at India and Indian capital market. IFSC is having a jurisdiction on the gift jurisdiction, or you can say the special economic zone, which is the gift zone, the special economic zone of gift. So there are absolutely two parallel of them. So the fund manager who is there at IFSCA needs to be there at IFSCA, and the SEBI jurisdiction fund manager needs to be present there at for the management of SEBI fund. Can a resident CA firm provide service to units in IFSC or needs to set up the branch there for service providing? So, a CA firm which is there in India have to set up a branch or their office at IFSCA to provide the services. In August month, our institute have came up with new norms where in the council it was decided that if any of the Indian partner is there in a firm which is there at foreign and he's partner in that firm also, then it would not be considered that he have done any violation, or you can say now the institute have allowed a chartered accountant to be a partner in the domestic firm and the foreign CA firm, and it would be considered that he is a partner in a single firm only in terms of the CAG points. As like if as a partner, you cannot be partner in two CA firms. The CAG does not give the credentials of that. Now that have been taken away in the council meeting in month of August. So from here, Sangni ji, you can please take things forward.
Right. Shall we move on to the next question, sir?
Yeah, please.
Right. So, can IFSC registered fund manager manage the AIF registered in India with SEBI?
I have given the answer. If other our colleagues from IFSCA and BSc wants to add on, they can please.
I think Paras sir and Pavan sir had to join some other meeting, so they are not available with us anymore. But
Okay.
if Ashok sir wants to add on to this, he can do that.
So
Otherwise, we can move on
sir
to
has
the
already
next
answered
question.
this question, so we can move to next question, I guess.
Right. Do you think if LTCG is nil, FII will migrate to trade in this exchange long term and move away from BSE NSE?
Amit sir, more on you.
Okay. So we are now as a gift, we are competing the world. So it would not be like any movement of the FIs from the domestic exchange to the international exchange. But definitely, if there would be two parallel products which would be available there, you can say the entity which is listed at domestic shores and which is listed at the gift active shores, definitely there would be a turnover which would be happening. There would be a shifting. But in totality, the gift IFSCA and the domestic shores are not competitor to each other. Gift is a competitor to the International Financial Service Center and the countries which are outside.
Right, sir. I think you've taken up all the questions then. I think you've answered all the questions. Do the participants have any other questions for the speakers? We have one more question. Is there any restriction on investment by the IFSC to the Indian fund?
Sir, Ashok sir, should I give?
Yes, sir.
Ma'am, can you please come up with the question again?
The question is there any restriction on investment by the IFSC to the Indian fund? I think
So basically, IFSCA is just a regulator, and what I am understanding is if there is any fund which has been incorporated at IFSCA, would love to invest in India, is there any restriction? This is what I assume is the question. If this is the question, then the answer is no. There is no restriction through which the IFSCA fund can come up to India. The only restrictions we need to see is as IFSCA is a foreign jurisdiction. So whatever investments are being permitted as per FEMA for taking the foreign capital, those regulations needs to be seen that the amount or the sector is not restricted one. That is all we need to see in terms of the value. There would not be any restriction. So we need to go through the FEMA in terms of any restrictions if there for a particular sector.
right, sir. I don't think we have any other questions, so I think we can close the session. Thank you so much for your valuable time, Ashok sir and Amit sir, and to the speakers who were there with us before as well. I thank you on behalf of the Committee on Financial Markets and Investors Protection. I'm sure the attendees have a lot that they've learned from you today, and we hope to engage you for further such sessions in the future, definitely. And we had a great time. It was indeed very insightful. So thank you so much for your time.
Thank you very much.
Thank you, sir. Thank you.